Well, health insurers are back in the political spotlight with Congress grilling executives on Capitol Hill over rising premiums, denied care, and executive pay. For more, bringing in now Kim Monk, founding partner at Capital Alpha Partners. Kim, it is good to see you. So I guess first thought, Kim, just get your take on that hearing on Capitol Hill. CEOs are up there, these big insurers, they're getting grilled. Kim, you were watching. I mean, what did you make of it? What did you learn? Was it just theater, Kim, or no? You see real policy change coming?
Yeah, well, it was a long day for those CEOs. They had two very long back-to-back hearings where they had to field a lot of questions. On the one hand, it was what you would expect, Democrats staying on message, blaming Republicans for letting the enhanced ACA subsidy expire, and Republicans talking about how the ACA is unsustainable and Democrats built that system and we can't keep putting more money into it. I would say that it was surprisingly substantive in terms of the questions. A lot of discussions around cost drivers, underlying cost drivers. Some would say the insurers deflected, blamed hospitals and drug costs. Some talk of MLR, that's the medical loss ratio, and how the insurers are required by law to pay a certain amount for healthcare, 80 or 85%, and they're capped in terms of what they can have for margin and admin and marketing and things like that. But I think the other thing we saw was, from both sides of the aisle was some agreement over concerns about these big vertically integrated companies, about how that impacts consumers, about the PBM model, and particularly the overseas group purchasing organizations, CEO salaries. So it's a little bit weird because we're seeing this sort of populism where the right and left are coming together around some of these issues, and we even saw some Democrats defending the health insurers. So that was a little bit of a change from the past years.
You know who was also watching and listening clearly, Kim? Mark Cuban. I don't know if you saw this. Here's what Mr. Cuban posts on X. And when he posts, he gets attention. He says, "Too big to care. Make them divest all non-insurance assets." What do you make of that? Is Cuban right? I mean, could you ever envision that happening? And if it did happen, Kim, how would that happen from a policy perspective?
Yes, so I do follow Mark Cuban on Twitter, and he posts something like that every other day. He's very active. And he's not alone in saying that. Obviously, he has a vested interest himself because he has his own DTC platform, Mark Cuban Cost Plus Drugs. So he does have a financial interest as well. But other people are starting to talk about this. But, I think it's very challenging to go from we're concerned about this vertical consolidation to breaking up the companies. There is a bill that's been introduced by Senator Liz Warren and Josh Hawley, a Republican from Missouri, that would require the insurers to divest their pharmacies. That's not really gone anywhere. I don't think they've attracted many co-sponsors, but maybe it gains traction if the left and right are saying something's got to give here. I've never seen Congress step in and break up big companies, though. I think that that's something that's difficult to do. And if you look ahead for the rest of 2026, I don't see a lot of legislating going on. We've got very tight margins on the Hill and a midterm election coming up, and Congress is probably going to finish this round of spending bills and be done. So the other avenue here might be, DOJ or FTC, sort of antitrust. That's not so easy either. FTC has been looking at PBMs. They do have some litigation around the PBMs and their insulin prices. But if you take a page from what's happened in big tech, they've been working for decades on antitrust issues there, and they really haven't had much success. So even if Trump sort of steps in and says, I want FTC, DOJ to start looking at these, big PBMs, vertically integrated companies, we're talking many years down the line. And even then, all these deals were approved by regulators at some point in the past.
You mentioned Trump stepping in, Kim, and the president has said He wants to meet with health insurance CEOs, wants to negotiate price discounts, like he's done with drug companies. How do you see that potentially playing out?
Yeah, well, they're having a hard time even scheduling it. Trump has been talking about this since before the holidays. Of course, he's been busy with international affairs and other issues. So we'll see if and when this pans out. I don't see it playing out in a very positive manner for the health insurers. The comparison here really is, the pharmaceutical industry and all the deals the White House has made with the 16, large drug manufacturers. The reality is the White House, the administration just doesn't have the same regulatory levers when it comes to health insurance. There are different markets. Obviously, health insurance is largely a domestic business, so you don't have the threat of tariffs, which has been a big lever for the pharmaceutical deals. You don't have the regulatory framework that you have with pharma, which are, IRA drug negotiations and some of those levers. So I suspect Trump will get fairly frustrated and potentially even bored if the insurers start talking about, hey, guess what? Our margins are already capped with MLR, and hey, our rates have to be actuarially sound. And at the end of the day, if costs go up, that will be reflected in the premium. So I don't see it necessarily producing, deals like we saw with pharma. And I guess the question would be, what next? Does Trump get frustrated? Does he order, HHS and CMS to take some sort of action? And then you have to think about, well, what levers does the government actually have when it comes to health insurance?
Final question, Kim. I know we were, kind of watching lawmakers, rain down fire on these CEOs and these big insurance companies. How do, just actual Americans, everyday consumers, feel about their healthcare plans? What does the polling say there? Do we have line of sight, or are most people as frustrated?
Yeah, I think so. Historically, the view is health insurance is terrible, health insurers are terrible, but I like mine. I think we've seen that change. I saw some polling recently that suggested it's sort of crossed the midpoint, the 50% point of people who think the system is broken. And I think consumers are frustrated because they feel like they're paying more and more into the system, whether it's in premiums or higher and higher deductibles. And they're wondering what are they getting out of it? Because a lot of consumers are, facing delays, prior authorization, red tape, lack of transparency. So yeah, I don't know that we've reached a breaking point, but yes, there's definitely growing frustration. And I think just because the system is so complex, it's public, it's private. We have, private sector employers involved. It's really complex. So I think the lack of transparency and around how the whole system works is kind of frustrating for consumers, but also increasingly for regulators.
Kim, so great to have you on the show today. Appreciate your time. Thank you.
Sure. Thanks for having me.